Good evening, ladies and gentlemen. On behalf of Edelweiss, I welcome all the participants logged in for the conference call of Borosil Glass. From the management, we have Mr. Shrivar Kheruka and Mr. Swadhin Padia to discuss their quarterly results performance in the industry trend. Good evening, gentlemen, sir.
Good evening.
Good evening. Good evening, sir. So thanks a lot for, first of all, giving us the opportunity for arranging this conference call for our clients. I'll first request you, Shrivar and Swadhin, that if you could just take us through your quarterly results performance and then some industry trend, and then we can follow it up with the Q&A session, sir.
Sure. So greetings, everybody. Greetings and welcome to this investor call to discuss our performance for the first quarter and our business outlook going forward. Our CFO, Swadhin Padia, is also with me on this call. We concluded our board meeting yesterday and have uploaded our results and an updated presentation on the company's website and those of the stock exchanges. Earlier yesterday, the company also held its AGM. As some of you are aware, the board has proposed a bonus issue of 3 shares of ₹1 each for every share of ₹1 held. At the AGM yesterday, the shareholders of the company approved this bonus. The record date for this bonus is 3rd August 2018. I'll now briefly run through the highlights of Q1 and other recent developments and then open it up for questions that we'll be glad to address as best we can. Q1 has gotten off to a very good start with all the business lines performing well. Our overall revenue was 107.7 crores. This includes the 2 subsidiaries, that is Glasspack as well as Opel Tableware. This shows a growth of 46% over Q1 FY18. A part of this growth can be contributed to a low base last year as GST around the month of June had impacted certain trade sales. Having said that, the growth is still very strong and puts us on a very good wicket to achieve a satisfactory growth during financial year 19. Another point to note for this particular quarter is that we've also implemented Ind AS 115, which necessitates some change in accounting for revenue. The net impact of this is an increase of sales by approximately 6 crores. Without the benefit of this impact, the growth would have been 38%, which is still a very appreciable number. The scientific products, in fact, have been the chief beneficiary of this Ind AS change. Without Glasspack, although on the presentation it shows 46% growth, net of that Ind AS change, the growth was 12.6%, which is in line with our long-term or medium-term outlook. In our estimates, our market share remains well over 60%. In fact, we believe that we have gained some market share in this quarter. Glasspack has added new customers to its list over the last year, and efforts to get empaneled with other leading pharma companies in the company continues. This can create a moat around our businesses as our customers will limit the number of approved suppliers. During Q1 FY19, Glasspack achieved a sale of close to 10 crores, which was a growth of 40% over the first quarter last year. In LabQuest, our focus will be on product design and development through our 100% subsidiary, Borosil Technologies. All this being included, the total labware portfolio recorded sales of 44.8 crores in the first quarter, a growth of 45% over the same period in the previous year. Net of Ind AS changes, this growth would have been 19%. The consumer product portfolio achieved a revenue of 63 crores in this quarter, which is a growth of 47% over Q1 last year. Net of Ind AS changes, actually the growth would have been higher at 51%. Products under the flagship Borosil brand grew by 42%, aided by a very encouraging response to some of our new product lines. In the Opalware segment, Lara by Borosil recorded sales of 25.6 crores, registering a growth of 54% over the previous period. Over the previous same period. In the consumer product portfolio, particularly in storage and in Lara, we are supported by a tailwind, which is helping us deliver great growth numbers. There's a growing awareness about the harmful effects of using plastics for food storage and dinnerware. We envisage a big opportunity to convert usage of plastics in the kitchen and in on-the-go products such as lunch boxes and flasks to much healthier glass products and some high-grade steel products under the Hydra range. We are focusing on increasing our range of SKUs while culling slow-moving SKUs in the long tail. In order to increase availability, we're working on increasing width of reach as well as depth of SKUs within stores. Our team is also increasing its thrust on e-commerce sales, which can become a very meaningful channel over the medium term. Coming to EBITDA margins, EBITDA from operations were standing at about 13.8 crores. Although net of Ind AS, this figure would have been 11.6 crores. The operating EBITDA margin has increased from 8.4% to 12.8%. The company has begun reaping the benefits of operating leverage. In a traditionally poor quarter, Q1 is the lowest in general. We find we have been able to increase our margins, in a meaningful manner, and that certainly bodes well for the coming few quarters. In Lara, we have been talking about an expansion as well as an improvement in the efficiency by addition of a new product line, a new furnace. That has happened, and the furnace is stabilized, and efficiencies have indeed improved. And we have registered a fair growth in EBITDA margin in Lara from almost 0% to 13% or thereabouts in the first quarter. Borosil registered a PAT of INR 10.5 crores as compared to 5 crores in the first quarter last year. So coming to medium-term outlook, it has been just about 2.5 years since we acquired Hopewell with its brand Lara, and just under 2 years since our 60% acquisition of Glasspack. I'm quite happy with the way integrations have progressed. In both cases, our acquisition assumptions are playing out. In Lara, we've been able to increase retail reach, and our marketing initiatives have also borne results, with the brand reaching 100 crore mark last year. In Glasspack, we've been able to leverage Borosil's customer relationships and have got Glasspack empaneled with a number of new customers, including some of the top pharmaceutical companies in our country. We have clearly identified our pillars of growth and believe we are well placed to achieve a figure of revenue growth in the high teens in the medium term. In the scientific portfolio, we continue to get steady growth from a strong franchise of long-standing customer, and we have over 60% market share here. We will offer the LabQuest range of products to the same customers, import substitution, which is more value for money, for our customer. We continue to grow the number of customers for Glasspack, and we build on the export markets of Middle East, Africa, and Southeast Asia. In the consumer portfolio, we expect steady growth in the core range of microwavables. In kitchen storage and on-the-go products, we see the rising awareness of the health benefits of using glass, as well as the aspiration to use better design as a big trend, and we see the potential to leverage on this trend to really grow these two categories. Lara has the advantage of opalware being inherently a superior product by product attributes, as it's lighter, it's tougher, chip-resistant, and easy to clean, also being vegetarian. With giving all these attributes, we're still quite price competitive with substitutes such as melamine and even bone china. There's an opportunity to grow the market without having to aggressively fight for market share. New products will be a focus for both storage and Lara. We will continuously improve designs to enhance utility and introduce fresh and appealing SKUs in line with the latest trends. Currently, we have a presence in the kitchen appliances segment. Here we will focus on offering products of a superior quality and benchmark with the best in class. Our objective is to offer differentiated niche products and build this as a future pillar for growth. We are strengthening our multi-channel sales infrastructure to support all these lines. By increasing numerical reach in general trade, increase listings of products in modern trade, and providing an impetus to e-commerce. EBITDA margins will expand further as the company gets scale benefits, absorbing our overhead, specifically marketing, on a larger base. While the company will continue to invest in marketing and brand building, sales are likely to grow faster than we expect marketing expenses to increase. The company completed the upgrade of its Jaipur factory, which manufactures Lara. Efficiency gains are expected to improve the Lara cost structure. Higher volumes will also translate into optimized freight costs by utilizing more full truckloads. We expect to improve EBITDA margins to between 15 and 20% over the next 3 years. Most of you are aware of the new scheme of amalgamation that the company and its board has approved. We had discussed this over a call with many of you last month. The details are available in the investor presentation we have uploaded on our website. As I mentioned then, this is subject to the approval of shareholders and all relevant authorities, and we expect that it will take about 9 to 12 months to implement. Another point to note is that in July this year, we have increased Borosil's stake in Plaspac to 70.2% from 60.28%. So, in conclusion, I would like to say that my team and I continue to be excited about what lies ahead for Borosil. We feel confident about building a strong business with a long runway of growth accompanied by improved margins. Another point I would like to share is that we have recently tied up with the Indian Olympic Association for a period of 6 years as their hydration partner. This is, we believe that we must support our athletes, our Indian athletes who go out and who are in various disciplines such as track and field, judo, wrestling, boxing. And we believe that this will be a good brand association for Borosil as well as for IOA in the times to come. And we expect that we can draw, both entities will draw a lot of benefits from this association. I'm now happy to take questions that you may have. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, participants may press star and 1 on their touchtone phone now. We have a first question from the line of Lakshmi Narayanan from Catamaran. Please go ahead.
Hi, good afternoon. This is actually Varun. Thanks for taking my questions. I just have 3 questions. So one is, I think you mentioned that the furnace, the new furnace has been, the work is completed and the products are, from that furnace are out in the market. Could you just talk a bit about, the product quality, coming out of this new furnace and, just in terms of where it's at versus what you would, what you're targeting? That's question number 1. Number 2 is more from a market angle. Could you give us a sense of, the growth numbers are obviously very strong. So could you give us a sense of whether the growth is coming from some of the adjacent products like melamine, bone china, or do you think that, the company is winning market share against competition as well? What's that mix like? And the third part is, hello?
Yeah, sorry, go ahead.
Yeah, just last question is also on the online channel. I think you mentioned that that's also an important channel for the company. If you could just give an outline of how you're thinking about it. Do you have plans for separate products for online? What would be some other challenges that you would have to deal with this channel, and just some outline of how you're thinking about that?
Okay, thanks for your questions. I'll answer the first one. Coming to the efficiency improvements in Lara and what we see from there. So one of the biggest benefits that we have here with the new production line and the higher technology that we have used is that we are able to draw a higher pull from the furnace. I'm sorry, there's some disturbance on this line, but anyway. Can you hear me?
I can hear you.
Okay, sorry. Yeah, sorry, there's some disturbance. Anyway, I'm saying that we are able to expand our product portfolio because earlier we were providing only one shape, let's say, of plates and which is called the fluted range. Now, with the new technology, we've been able to successfully have 2 other designs, the shapes rather, of plates and cups and saucers and bowls which have come. And that's definitely adding to the variety of products available in the market. And therefore, that is helping us grow the market. To answer another question which you had on the issue of the...
Srivar, sorry, if you could just touch upon the quality as well of
yes.
the products in the market.
Yeah. So we've not only increased the upstream quality of, improved the upstream quality of the, what we call the whiteware, but we also added a couple of new tempering lines, which are very, very, let's say, high-end tempering lines, which have certainly improved our strength and our, the shape of the plates, the strength. We believe that the quality has improved substantially, and we think that we are now benchmarking ourselves with best international players in the market. So we are quite satisfied, actually, with the improvements in the quality. And the feedback in general we've got from the trade is also similar. And that we can see also as a result, our numbers have improved.
Got it.
So coming to the other two questions on channel and, are we getting a share from competitors or whether we're getting a share from category growth, I believe we're getting share from category growth because I don't know the numbers for our competitors yet. They've not declared. But my sense is that even the competitors are growing. So...
And what is exactly driving category growth? Because obviously post-GST, there's been some impact on, let's say, unorganized players in the other adjacent areas. But beyond that, could you just explain a bit about what's driving that growth?
So it's a good question. I don't have a specific answer for you on that. I definitely think that people understand because the availability of the product is now in every nook and cranny. And I'm not just talking about our product, but also talking about products from our competitors. We do believe that is also adding, there's a multiplier effect which happens where customers go and even the retailers are telling them about the benefits of Opal compared to the benefits of, compared to the problems with bone china or melamine for that matter. Even bone china, they recently put an anti-dumping duty from China, from the country China on bone china. And as a result of that, prices in my view have gone up. And that also is helping category substitution. As far as e-commerce is concerned, we put a team together. And earlier we were only selling through Amazon. Now we're on Flipkart as well. And a few other, listings are happening as we speak. And I think we now are much more focused on e-commerce. And that is driving growth in a very healthy manner for us.
And what is the aspiration for, for online channels in the near term? Or
I can't give you a number. I think overall e-commerce should end up being 15% of our sales, 10 to 15% of our sales in the next couple of years.
Got it. And
I think you should let others ask questions. We'll come back to you.
I'll come back in the queue. Thank you.
Yeah, thanks.
Thank you, sir. We have a next question from the line of Prakash Kapadia from Anivid Portfolio Managers. Please go ahead.
Yeah, thanks for taking my question. I had two questions. On the opalware space, despite, the small base and potential which the industry has, I'm just, guessing why can't growth be higher for us? Because, we are expanding distribution, we are launching newer products. So what are, the biggest challenges in the opalware space to grow faster than what we are currently doing? That's the first question. And in terms of, the 100-odd crore sales number which you mentioned, how much of this would be, top 10 cities and beyond? If you could give some color on that, that will be helpful.
See, as far as the second question you asked, I can't share that data with you. But I can tell you that, look, to grow, we have grown 54% in the first quarter, which I think is a fairly decent number. I'm sure you'd agree. I do take your point on the fact that it's a small base, but that, to grow, it's a number of things. Of course, products is one of it. You need to have distribution. You need to make sure your outstandings don't increase. I'm sure I could increase sales much more if we were to, kind of relax our policies on outstandings and, our credit policies. Also, the kind of, we always believe that growth should be, we don't mind sacrificing very high growth, but for sustainable growth. So we would rather take decisions in long-term, best interests of the organization as well as our channel partners. So we don't like to dump them, for example, products and hope that they'll sell. We don't give material on consignment. Those are things that we typically avoid doing. And I think that would give us a certain growth trajectory. And we are at 54%. If we can sustain this kind of growth, I'd be more than happy with it. Because this is sustainable growth. This is sustainable growth.
What's the typical, credit cycle when you, plan your business? So,
it depends on the channel, but it could be anywhere from 30 days to 90 days.
30 to 90 days. And, over the last 18 months, what has been the scale in terms of, our reach and what is the potential and, any particular number you're looking at for this year in terms of our reach for
our distribution, as it's mentioned in the PPT, but our distribution is about 200 odd distributors and more than 10,000 retail outlets. I anticipate that we would be increasing our distribution by maybe 7 to 10% in terms of both distributors as well as retail outlets, over the next 2 to 3 years each year.
But in terms of retail outlets, what could be the actual potential of this, to grow? It could be 20,000, 25,000.
Yeah,
which are meaningful.
There is no specific, third-party data available for this particular thing. But according to me, our own internal estimate says that there are about 18 to 20,000 retailers of this product category, or our product categories in the country. Depends on who you talk to. But obviously, there are many cases you can't get all of them, because in most cases, like in large cities, you'd have 10 retail outlets right next to each other. Now, not all 10 of them will stock the product, just because they wouldn't. So
cannibalization would happen.
Yeah, exactly. So you can never get 100% of that. I think if you can grow to 13,000, 14,000, then we would be in a good position.
Understood. Thanks. All the best. I'll come back if I have more questions.
Thank you.
Thank you, sir. We have next question from the line of Saurabh Shah from AUM Advisors. Please go ahead.
Yeah, hi Shiva. Congrats on your good set of results.
Thanks.
One question more on the market. You mentioned earlier, two questions. Any sense of, what is the price gap between, you guys and your opalware product versus, things like the steel and the plastic and the bone china things. So, as you're looking, from what I sense, a larger opportunity in the market share shift than really that much in the tableware. How should one look at it from a pricing hierarchy,
So, actually, steel is all over the place in terms of cost, okay? But I'm saying if you look at bone china or melamine, which are two other categories, I think now opal dinner sets are cheaper than both of them, in general, with various schemes and discounts available. So I think the pricing is already quite aggressive, if you ask me. So I don't think
from your perspective, what kind of range would that be versus, say, the range for, this bone china and melamine?
I think we'll be about 10 to 15% cheaper. So a 27-piece dinner set that we would sell, MRP would be anywhere from 3,000 to 3,500. You may see a melamine dinner set of 3,500 to 4,000. So there would be a 10 to 15% difference. Similarly, bone china, you don't really get dinner sets, but if you were to put together a dinner set by buying loose products, it would be, again, maybe even higher than 4,000 rupees. So we are certainly, I would say, not only in my view, a better product category, but we're also cheaper than those guys. And I think that's what's driving, very frankly, the substitution towards opal.
So it's more bone china and melamine, which, as you're saying, is about 10 to 15% now, I guess, partly by this bone china anti-dumping duty as well.
Yes.
This proposition much better for the consumer with the advantages that, I guess, opalware has.
That's right.
Okay. And any idea about the size of these markets at all, this melamine and bone china at all?
Yeah, I think they've shared that in the presentation, if I'm not mistaken. No, I think it's only opalware we shared. But bone china would be maybe 600-700 crores. Melamine, again, these are all internal estimates. So my estimate for melamine is also 300 to 400 crores. Although my market information tells me melamine is not growing at all, maybe even declining in growth. And similarly, bone china, my understanding is that things are, the companies are doing well who are doing bone china, but that's primarily because the imports have really reduced after the.
So these are the small markets, right? It sounds like the steel in that market is really the big one.
That's right.
You're at 500 crores in this opalware space, and the other two also combined sounds like there are about 1,000 crores.
Yes.
Really that move which has to come in to really give you the growth, from a multi-year perspective, right?
That's right. And it will happen, I think, across categories, or especially in opal, you will see, and anecdotally I can give you many examples of people even in lower ends of the income, strata, buying opal compared to steel. And, you have heard anecdotally many things. I don't have any evidence or data to support it, but certainly I think it's becoming a really mass market product.
Okay. Next question, you're also on this competitive pressure. You had an older incumbent, and now you have, I guess, from last year, another competitor. How are you seeing price points, especially in the last quarter? Have you seen pricing pressure or anybody's passing on any costs, or are you seeing that in the competitive dynamics where people are doing this to either retain or increase their market share?
See, I can tell you that our average pricing has improved in the last in this quarter compared to the quarter before.
Okay.
And it's not a small improvement, substantial improvement. And that's driven by, a couple of things. Product mix, of course. You get tie-ups with, various either B2B or large format stores. which are meaningful in nature. So you could always find, someone is selling some stock at a very low price. But in general, I don't think we are seeing some, incredible amount of pricing pressure in terms of downward, drifting prices. In fact, we have been able to successfully actually improve our price realizations in this quarter.
So apart from the mix, also you're saying that you have been able to have been able to increase pricing for your products.
Yes, I would say because the mix is a big part of it, but certainly, there have been some cost increases also as we see in terms of, imports and fuel and so on. We've been able to pass all of that on to the end customer.
And the competitors, any idea if they have been able to increase pricing? Are you hearing anything? Or
Look, there's two facets of pricing. There's an MRP, which is what the customer buys, the end customer buys, and then there's the distributor price, right? So typically, even if you don't increase MRP, you could still improve your own pricing, meaning the manufacturer can improve the pricing by either reducing or increasing discounts, right? So I don't think
for the manufacturer, not the MRP.
That's right. So MRP, I don't think there have been much changes, very frankly. I think people have been playing around a little bit on the schemes and the discounts. So it's hard. So for me, it's very hard to comment whether others have been able to improve the realization or not. Let's see the numbers. And also, I think we are one of the first to have declared results this quarter. So we'll have to wait and watch. But MRP, I have not seen, at least my information is not that there's been any substantial changes in MRP in the last quarter.
Okay, great. Thanks again and best of luck.
Thanks.
Thank you, sir. We have next question from the line of Praveen from Edelweiss Broking. Please go ahead.
Yeah. Hi, sir. Congratulations on a very good set of numbers. So, can you give some details on the scientific wear, excluding Glasspack, where you have delivered a very healthy numbers?
Yeah.
So, can you give in the breakup some from where you got and how much of the growth actually?
So as I shared with you in the opening remarks, scientific wear actually, the numbers which are on slide number 3 shows 46% growth. And we've made a note at the bottom that is in AS 115 we've adopted. Without taking that into account, the actual growth in scientific wear is about 13%. Glasspack would be remaining the same at 39%. So overall labware or the scientific products division, we would be growing at 19%. So the 13% that scientific products, meaning our lab glassware has grown, is more or less in line with long-term trends. And there has been no specific, let's say, contributor to this. It's just the overall market growth and certainly, yeah.
Got it, sir. Got it. And just coming to Hopewell, so are we planning for any, as the competition, if you look at, they are in the 3 different price points and with the 3 different brands. So are we in a plan to do so in the same way?
See, we've improved, like someone asked in the beginning, what's the quality? So our quality has improved, and we've launched a new series called the Moon series, which is with premium packaging as well. And that's at about 15 to 20% higher than our current price points. And I believe that the response has been very good in the market. It's early days, so we have to still wait and watch. But we are not calling it a separate brand because we believe that that's actually confusing for customers. The name is Moon, but it's still sold as Lara, Lara by Borosil. So it's not something different from there. And we've got good traction. We have a pretty decent order book. So we are not at the moment looking to change that strategy.
Okay. And also you had a very well explained on the distribution channel mix. Can you give any light on the geographical mix as well throughout the country? How is the consumer wear entire is...
See, North continues to be the largest area for us. I think more than 40% of our revenues come from North, followed by West, then East, and then South. So, West also, things have improved for us. Earlier I mentioned that West and South are a little bit weaker for us, but we're seeing substantial improvements in the Western geography as well, although there's a long way to go there. So we believe that we are quite, we are moving in the right direction as far as our distribution strategy is concerned, and that is definitely resulting in, good growth numbers.
Yeah. So, and lastly, sir, on again your existing consumer wear business. So there also we had seen good numbers. Yeah. So can you give some details like how the storage segment and how is your microwave segment has it done?
So we don't split the numbers up, but I can tell you that storage is driving the growth for sure for us. Okay. And microwave is also growing more than double digits, but rather in double digits. But the storage is definitely the driver for our company. Okay.
Thank you, sir. Thank you for taking my question. All the best.
Thanks.
Thank you. We have next question from the line of Hitesh Kumar Jain from HUL. Please go ahead.
Hello.
Yes.
Yes, sir. Can you have a bifurcation? What is manufactured in-house and what is outsourced for manufacturing, and what is the revenue in terms of that?
So I can't give you any further bifurcation than already given. I can just tell you that all the products made by Hopewell and Glasspack are manufactured in-house, and in scientific products, most of the products are manufactured in-house. But in the consumer products for Borosil, there is some which is manufactured and some which is outsourced. Beyond that, I can't give you exact numbers, exact details.
Okay. So what, another question was regarding the demerger. Why we have not directly demerged into a new company against consolidating into a one company then going for a demerger?
So look, we got advised by PwC, and from all perspectives, from regulatory as well as tax perspectives, this was the most efficient way to do it.
Okay. So the real estate what we are developing in the company will remain with the Gujarat or Borosil work, or it will be moved to Borosil?
No. Whatever is currently the real estate assets of Borosil will move into the Hopewell table.
Where? Actually, I didn't get you. Can you come back?
I'm saying whatever real estate, which is say with Borosil Glassworks Ltd, will also be demerged into Hopewell Tableware Limited, which will then become Borosil Limited.
Okay. Any plan for developing that real estate?
No, we are not in the development business.
No. So what is the reason for forming a wholly owned subsidiary?
There are certain reasons which I cannot get into at this during this call, but there are certain good reasons because in order to fully, let's say, develop the highest price we can get for that asset, we would need to take certain permissions, and those permissions come in the name of the company, and we didn't want the permissions to come in the name of the parent company.
Okay.
So one more, just to add to that.
Sorry to interrupt.
Sorry. Okay.
Please go ahead.
No, I was just saying that as a part of this merger and demerger, Gujarat Borosil will also be being removed. It'll become a separate company on a standalone basis. That's clear, I hope, as well.
So Gujarat Borosil will do not.
Let's come back in the queue, Mr. Jain.
Sure.
Please come back in the queue. Thank you, sir. We have next question from the line of Ankit Kedia from Centrum Broking. Please go ahead.
So just wanted to know on our distribution, you said currently we have 10,000 touch points and 200 distributors. How would be the overlap with our, borosilicate products, our microwave products? So
look, I think as far as Opal is concerned, we are probably in about 6,000 retail outlets. So very few outlets will have all the ranges. Okay. So depends on the type of outlet. It would have certainly vision glasses would be available in most of the outlets. Mixing bowls would be available in most of the outlets. But as far as if you look at storage and Hydra and Lara and microwaves, it would be a little bit of a skew. But I would say there would be overall 60 to 70% overlap amongst many of these product categories.
And so how are the synergy benefits coming in? Because typically the same sales guys will go to sell at the retail touch point and, he's adding more products to the bouquet. And so what synergy benefits are we driving out of that?
Yeah, so there's two synergies. It's a good question, I think. One is the sales team itself, right? there's a highly synergistic kind of approach. The guy is already going, we're already paying his salary, we're already paying his travel costs, and he goes in and he's selling a bigger bouquet of products than in the past. The second synergy, which is possibly even more meaningful, is in marketing, right? Because when we are marketing our product, we market it as Borosil, and so the customer remembers that name, and that builds trust. So if you remember the name Borosil, and even though we may have done a marketing campaign for a lunchbox, but people see Borosil on a steel bottle, or if the brand name recognition is very, I would say, substantial. So I would say that is the main two synergies which really get driven by this, bouquet of products.
Sure. So coming to the marketing, what is the marketing budget for this year, and will we have a separate ad campaign for opalware category, or again it will be a common ad campaign like the no plastic campaign we had done?
Yeah, we will have a separate ad campaign for Opal. And in fact, going forward, our marketing expense for this year, I think, if I'm not mistaken, is likely to be about 13 or 14% of revenues. So it's a pretty substantial number.
Sure. So my next question is, over next 2 years, would bulk of the growth come on back of volumes, or we also looking at the price increase, given that, the pricing is at the lowest in last 3 years for the opalware category, and it's cheaper than, bone china and melamine, which is low quality product?
We are focusing more on volume growth at the moment, because really the penetration needs to improve. Pricing, definitely, there will be some improvements, but I don't think they will be substantial compared to the volume improvements that we will see going forward.
So currently, post the new furnace, what is the capacity and what is the utilization levels?
I think overall, if I look at revenue, we could do probably, if we are running at full capacity, we should do somewhere around 180 crores of revenue with the new furnace. And this year, we probably will be somewhere in the 80% kind of capacity utilization range.
Right. And so my last question is...
Sir, I'm sorry to interrupt. Would you like to come back in the queue?
Just one question regarding channel sales.
Please come back in the queue.
Sure.
Sorry to interrupt. Thank you very much. Thank you. We have a next question from the line of Rudhir Barma from KSA Shares and Securities. Please go ahead.
Yeah, hi. I was wondering if you could just tell me whether after this scheme of amalgamation comes into place, whether there will be any other related parties where we have some significant transactions?
Well, I mean, all companies will have related parties, but in terms of significant, I think this will cut down most of the transactions. I don't know if there will be zero, but there will be some subsidiaries still that Borosil will have, like Borosil Technologies, which is...
which is fair, which is, again, within the listed space. I'm talking about, outside what is...
No, I don't think that there will be anything.
Fine, great. And the second question is regarding the market share that we have in the opalware business. I mean, as compared to our competitors, have we been gaining market share to a large extent?
Well, I mean, certainly in the year before, we have gained market share. This specific quarter, I can't comment. Like I said, I don't know the numbers of our competitors. So it's difficult for me to actually answer that question.
Okay, fine. That's it from my side. Thank you.
Thanks.
Thank you, sir. We have next question from the line of Rakesh Jain from Asit C. Mehta. Please go ahead.
Hi, Shiva sir. Good set of numbers, and thanks for the opportunity. So my first question is on the front of Glasspack. So last quarter we knew that we are operating at 65% utilization, and we did have almost similar kind of revenue in the current quarter. So why do we see there's a dip in the EBITDA margins, from 9 to 3%? And subsequently, the SIP division, when do we see, the Glasspack's margins replicating our core SIP division, in what time frame?
So that's a good question. Again, I think one of the issues when we added new customers is that there's some more challenging products in order to get to manufacture, and we saw some level of let's say material losses in that product development phase. That happened this quarter. We've also recruited some fresh talent over there in the production department, some skilled talent, and we expect that we'll be able to improve our efficiencies. So on the front end, while we had a very successful first quarter, 40% growth is quite substantial, although of course the base is low, but it's still a a good, uptick. We did get, beat on margins because of, those let's say, losses that we had to incur. I think this will improve in the next, quarter and as well as going forward. But it's certainly something that is, let's say, a focus area for us to look at. To answer your question about the margins of Glasspack being replicated to SIP, my sense is it's going to take at least 12 to 24 months where it'll come close. I'm not sure it'll ever be hitting that margin just because this is more a more a B2B business. SIP is more a B2C business. So it may not hit the same number, but it'll be a good number.
Right. Hello.
Yeah, can you? Yeah.
Yeah. Okay. And could you just little breakdown with respect to SIP and CPD? What was the sort of breakup between volume and value growth we have done?
It's almost impossible to do that because there's so many products. We have thousands of SKUs in each of the, in each of the two divisions. Very difficult to really break that down in a meaningful manner. So that's why we don't do it at the moment.
And any particular reasons we have faced PAT level losses in the Hopewell currently?
Yeah, that is easy to explain because, when we invest in this new furnace and this new technology downstream as well, the interest and depreciation costs have increased quite substantially. Although I would point out one thing which I think is meaningful is that if you see the EBITDA of Hopewell was 3.3 crores on a top line of 25.6, so that's almost say 13%. This is including an ad spend of virtually 15% of EBITDA. So without the ad spend, you're actually at 28% or 27-28% EBITDA margin. Now the ad spend, although incurred, will be giving us more benefit in the next quarter. So I expect that this PAT level loss will reduce and be eliminated in the coming quarters.
What is your target ad spends for Hopewell for the full year?
I think about 13 to 14% of revenues.
13 to 14%. And similarly would be for the core business of CPG?
Yes.
All right. Okay, that answers my question. Thank you so much.
Thank you, sir. We have a next question from the line of Lakshmi Narayanan from Catamaran. Please go ahead. Lakshmi Narayanan, your line is unmuted. Please go ahead.
Yeah. Thanks for taking my question. In the previous calls, you had mentioned two things. One is,
sir, please come close to the mic.
You had actually mentioned two things. One is in terms of your forward guidance for the year in Opalware, you said it will be around 130 crores and that your target EBITDA margins down 2 years will be around 25%. Now that you're doing extremely well, are we increasing the guidance upwards, both on EBITDA margins as well as revenues for the year and the year after?
As far as the EBITDA margins are concerned, I would not change my guidance, but definitely the first quarter of the year, we have seen a good pickup and we hope to beat that 130 crore number. I don't want to commit to that at the moment, but we definitely hope to beat that number. But if I look at my longer term, 15 to 20% growth, I would stick to that for the time being.
And the mix of the GT and MT and e-commerce, you said e-commerce will be around 15% of the revenues.
I know. I said that's what we hope to achieve. It's not there yet.
Okay. What is it right now?
It's, I think, about 5 to 6%.
And the GT MT mix?
General trade about 60%.
For Opal, okay.
Yeah. Modern trade would be the rest.
Okay. Thanks. Thanks so much. I'll get back into you.
Thank you, sir. We have next question from the line of Ankit Kedia from Centrum Broking. Please go ahead.
So just wanted to know, people talk of Opalware only dinner sets, but I think a lot of the other coffee mugs and others also get sold and, that's at a lower price point of 300 to 500 rupees and the gift sets. So what innovation is happening on that front on the product basket and how much would that contribute to our sales?
Yeah, there is a lot of move towards these, gift sets as they call it. set of 4, set of 6, set of 8 kind of gift sets. And we have also seen that trend in the market. And we are capturing that trend. You have to be innovative in terms of what to call the set and how to position it. But I would say if earlier this was 15-20%, now this will be more like 35-40% of revenues. So it's definitely, you can see a marked increase there.
Sure. And so you spoke of a new Moon series which is 15% higher. Yeah. So this would, how would that be? The whiteness, shininess would be different apart from the shape of the existing plate, or why would somebody pay 15% higher? Or the designs are completely different?
Designs are completely different. The shape is, in our view, much more premium. It's a thali shape, so it's bigger. So you can actually, as we eat food in katoris, you can put 3 katoris and a roti on the plate and have a meal, very, very easily. There's a lot of space. You can put chutney and, pickles and all of that on the plate. So it's definitely, if you see the product, you'll see it's a premium product. The packaging is also more premium. So it's truly speaking a better product.
Sure. So the trade margins, for opalware is one of the highest in the industry. For competitors and for us, it's, nearly 45 to 50%, including promotions. So do you see that getting reduced over a period of time?
Yeah, I think once we are improving our capacity utilization, automatically that will reduce. Definitely.
Sure. And so my last question is regarding bone china. Is the anti-dumping duty for the first time imposed in bone china, or is it, it's a recurring?
No, it's for the first time it was imposed. It was a few months ago already now. So I don't remember exactly when it happened, but it has happened maybe 6 months ago, if I'm not mistaken.
Sure. That's it from my side. Thank you, sir.
Thank you. We have a next question from the line of Omkar Hatkar from Mira Village Investment. Please go ahead.
Hello. Couple of questions on, you're guiding for a growth which is more than 30%. So probably, with a capacity of 180 crores over the next 2 years, you would be reaching peak capacity. So, you would be required to add capacity for future growth. So how much probably, would you be spending on that capacity, and how much time will it require to come on stream?
I can tell you that new capacity will take 6 to 9 months to come on stream. But very frankly, we've not thought about the new capacity expansion yet. We are focused right now on getting this capacity expansion or this capacity utilization to be closer to 100%. So we know, it will be more or less a replication of current capacity or current technology. We're very happy with the new technology that we've got. So, we already know all the suppliers. So from the time we decide to do something, I think 6 to 9 months is really the time frame we're looking at.
Okay. And secondly, any feedback on how, the cello products are doing from probably your sales team?
I would not like to comment on a competitor during this call.
Sure. Okay. That's it from my side.
Thanks.
Thank you, sir. We have next question from the line of Hitesh Kumar from AKSA Capital. Please go ahead.
Hi. Thanks for the opportunity. I just wanted to clarify on the advertisement spend guidance that you had shared. So for FY18, we had an ad spend of about 24 crores on a top line of about 250 crores that came from consumer wear, both Borosil and Opal together. Now, even if we were to assume a 15% of modest growth for the year, a 13% spend would be somewhere closer to 37 crores.
Yeah.
That's quite a substantial increase in ad spend that we are looking at this year.
Yes, that's right. Because we saw, while you are right in that we, looking at 15, the numbers are more or less correct in terms of ad spend. We're looking at a substantial increase in ad spend because a couple of things have happened in this year which have kind of driven this. One is, the plastic ban, which has happened in Maharashtra. And when I say plastic ban, I mean obviously it's for certain types of plastic. But we see from customers a pretty big move towards other materials including glass. So we had to capitalize on this, and it was the need of the hour. So we therefore increased our ad budget for that. And the other thing is now we've partnered up with this IOA, and we believe that is a partnership worth talking about. So that will further increase our ad spends. So That's why we are guiding higher for our ad spend. But for sure, we are clear that both of these will really drive the positioning and the branding of the company for years to come. So it's a strategic move for us.
How much would you be spending on this partnership?
I'm sorry, I can't share that with you.
Okay, no, but what I wanted to understand is it just a 1 year spend or would it be
6 years?
6 years.
Yeah.
Got it, sure. Thank you.
Thank you, sir. We have next question from the line of Hitesh Kumar Jain from HUL. Please go ahead.
Hello.
Please go ahead, sir.
What is the surplus is currently in the Borosil now?
Sorry, I couldn't understand the question.
Surplus cash in the...
Sir, I'm sorry to interrupt. Please use the handset, sir. Thank you.
We have about 260 crores of cash as of March 31st, as of June 30th, roughly, in balance sheet.
Any plan for usage?
Sorry, I can't understand it. I can't understand your question.
Any plan for usage?
For usage, is that?
Yeah.
Yeah, absolutely. We have already we've already said that we are always looking for organic and inorganic expansion opportunities, and we're continuously studying those. But outside of that, we are putting up a warehouse which will be requiring utilization of the funds. We, as a part of the scheme, the amalgamation, there is in 125 crores which will be used to grow the solar part of the business. So these are two clear direct paths of usage of the funds. In addition to that, I would say that given the growth we are seeing, there could be other opportunities coming along the way. So we are quite comfortable with this level of cash, and we believe that all of this can be utilized by the business in the short to medium term.
Okay. Thank you.
Thank you, sir. We have next question from the line of Bharat Gupta from Edelweiss Financial Services. Please go ahead. Sir, please go ahead and ask your question. Mr. Bharat Gupta, your line is unmuted, sir. Please go ahead.
Hello.
Sir, please go ahead.
Yeah, thanks for taking my questions. I want to know about the presence of the unorganized sector within the consumer product division. If it's so, then what can be the market size for it?
I think because unorganized sector would probably contribute about 50%, if not more, in the consumer division. And this differs by category. For example, Opal would have a lower presence of unorganized competition, although Opal substitutes such as melamine would be quite a high degree of unorganized. Similarly, bone china, there's a lot of unorganized players in there. So it's difficult to put it's category by category different. But if I look at overall, I would say probably in our estimates about 50% would be unorganized. And we will definitely see a move towards more organized players.
Okay. Thank you, sir.
Thank you. We have a next question from the line of Alana Shah from HU Consultancy. Please go ahead.
Hello, sir. Sir, I had a question regarding in the annual report of FY18, you had mentioned that you have a 7.95 hectares of land that would be with Borosil Renewables post-amalgamation. So whose property would that be? The ownership lies with Qtr1 Borosil?
This has I'm not exactly sure of the value. I think it's a few lakhs only, the value of this. This is actually the property where the current plant of Qtr1 Borosil is situated. So it is not meaningful in the sense of any kind of value. But so this will remain with Borosil Renewables.
Borosil. Okay. And my second question would be the newly acquired subsidiaries that you've done. One is the Realty firm and the second one is Borosil Technologies. So they are both 100% acquisition. So post amalgamation, would these two companies would be with the new Hopewell, the Borosil company, or
that's right. That's right. No, it will both move to Borosil Limited, which is Hopewell. Yeah, the Hopewell.
Okay. Okay. And the reason behind acquiring the real estate firm would be?
Like I mentioned earlier in the call, in order to monetize that real estate, we need to get certain permissions. Permissions come in the name of the company, and later we are not looking to develop ideally. And but to get a better realization, if we are able to get permissions and then sell the real estate, it is more beneficial for us. So therefore, we can then sell the company rather than sell the property.
Okay, I understand. Okay, thank you very much, sir. Thank you.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Rohan Gupta of Edelweiss for closing comments. Over to you, sir.
Thanks, Vikram. Thanks a lot, sir. We had, I think, a pretty long and question and answer session. Just a couple of questions from my side before we close. Sir, one is that we have seen a very decent growth of 42% in Borosil and 54% in Hopewell for the quarter. Given that the first quarter is slightly weaker, so what is your trend for the entire year, or which you are expecting, and what is the industry growth has been during this quarter?
See, I want to just clarify to everyone on the call that last quarter, same quarter last year, GST had impacted growth. So in some sense, it's a low base effect that we have that we are getting at the moment. So I don't think 40 and 50% are something that we can guarantee for the rest of the year. Although I would like to say that the growth, even in spite of that, is very strong. So I do think we'll be on the upper end of our guidance, whatever we have given, for this particular year. We should definitely be on the upper end of our guidance. The market looks quite strong. Things are working. I think both demonetization as well as GST are far behind. Consumers have gotten over those two events. And I believe that both of this, their consumer confidence is pretty high at the moment in the country. So we foresee a good Diwali. We foresee a good, gifting season. So I think we are quite bullish for this particular year. Without committing to any number, that's what I would like to say.
And in the labware also, that this is also you contribute to the low base, or there is some pickup, because generally labware we see that doesn't grow more than 10 to 15%. So the higher growth in the labware segment is also contributed to that.
So as I mentioned, Classpack look is a low base, right? And I think there we can continue growing well in the next few quarters. The general lab business is again to do with the low base and as well as that Ind AS 115 which has come. But I think if we, which I've noted over there in the presentation, if you exclude that, it's more in the 10 to 12% range that you have mentioned. So there's nothing, let's say, extraordinary happening over there.
Okay. And so in labware, there was, I think, some dip in EBIT margin in the current quarter. So any particular reason for that?
I don't think there's anything meaningful there. I'll have to look into it, but I don't think there's nothing which has really driven. There's no change. There's no.
Because the margins have dropped to 17% in labware from, while we have seen the last year. I mean, except first quarter, we have seen close to 22% margin in labware business.
See, in labware in general, the first quarter is the weakest. So I would not be too concerned about that number. I think over the year it'll take care of itself.
Okay. Thanks, Shiva, and thanks, Fadheen, for taking your time out on giving us the opportunity to host this con call. I also thanks all the participants logged in for the conference call of Borosil. And thank you, and all the best for our upcoming quarter.
Thank you. Thank you all. Thank you.